It's a brand new year and you're welcome to the Market Review, where we bring you key developments in the financial and capital market as it relates to the economy. As we told you last year, it's recalibrated, so it's designed to give you valuable information, engagement, and insight into what's happening. It's all encompassed, so every Tuesday by 10 a.m., we'll be here to give you all the developments in the market from the equities, the fixed income and bonds, unlisted securities, and the commodities exchange. So we all have them every 10 a.m. on Tuesdays. So today, Tuesday, January 5th, 2021, some of the things we're looking at. But our core topic is 2021 key developments to watch in the Nigerian capital markets. For the outline, we'll be looking at the key news stories that we have. Proshare research, top 5 performing and top 5 lowest stock performers in 2020. 2021 key developments to watch in the Nigerian capital market. That's a core focus that we'll bring to you. But the major, of course, story that has been on since over the weekend till yesterday has been the Joint Technical Committee of the oil-producing exporting countries across the globe convened their 47th meeting via video conference on the 3rd of January, which was on a Sunday. That meeting, which was the 47th, is the 25th meeting of the Joint Ministerial Monitoring Committee and the 13th OPEC and non-OPEC ministerial meeting that held yesterday, Monday, 4th January 2021. Both committees were created under the umbrella of the Historic Declaration of Cooperation, which was signed at the first OPEC and non-OPEC ministerial meeting 10th December 2016 in Vienna, Austria. The JTC is JMMC's technical think tank. Dr. Mohamed Sanusi Barkindo, Secretary General of OPEC, opened the JTC meeting, thanked the committee's members for their tireless efforts during one of the most volatile periods in the oil industry's history. The Secretary General reflected on the proactive and decisive decisions taken by DOC countries in April, June, September, and December 2020, highlighting the bold and timely actions of the DOC participating countries throughout the COVID-19 crisis. According to him, collectively, we have delivered an unprecedented response to an unparalleled market shock and continue to lead the industry on the road to recovery. The Secretary General also emphasized that the outcomes of the December 3rd ministerial meeting paved the way for a gradual return of 2 million barrels per day production to the markets over the coming months, while the participating countries stand ready to adjust these levels depending on market conditions and developments. Barkindo highlighted that the global economy is forecast to grow by 4.4% in 2021, noting that the recent developments of the COVID-19 vaccine have injected optimism into the economy and the oil market. On all market developments, Barkindo noted, we anticipate that crude oil demand will shift from reverse to forward gear and rise to 95.9 million barrels per day this year. That's according to him. A gain of 5.9 million barrels per day from 2020. The non-OECD will be in the driver's seat with growth of around 3.3 million barrels per day. The Secretary General also concluded by underscoring the necessity of continuing to work together under the framework of the landmark DOC for the benefit of producers, consumers, and world economy at large. And I like this part because it's from the stable of Proshare, Nigeria's and Sub-Saharan Africa's leading financial information hub. Proshare Research brought out a very interesting insight into the top performing stock markets in the globe 2020 and also the top 5 lowest performing stocks in the globe. So let's get to it. The top 5 performing stocks, number 1, of course, was NASDAQ in the United States of America. NASDAQ Composite Index and the breakout of tech stocks in 2020 is not surprising because technology really had its breakthrough and continued to lead the pack throughout the year that you can describe as the year of pandemic 2020. So by 42.74%, the NASDAQ is the second largest stock and security exchange in the entire globe, behind only the New York Stock Exchange. The NASDAQ attracts some of the largest blue chip companies globally, with representatives from high-tech software, hardware, computer, and internet services companies such as Apple, Amazon, Microsoft, Intel, Cisco Systems, and Netflix present on the exchanges. Although other industries have representatives on NASDAQ as well, the NASDAQ index tends to be more volatile and growth-focused than other indexes because it has a higher composition of growth-oriented companies. The tech-heavy NASDAQ topped Proshare's list of gainers in 2020. The industry's biggest players, Amazon, Apple, Facebook, Alphabet, and Microsoft, were somewhat well-placed to rise to the challenges of the coronavirus pandemic as the virus accelerated digitalization around the world. For example, Zoom Technologies Incorporated, the go-to video conferencing platform during the pandemic, saw its stock price go up by plus 464%. Can you believe that? From $68.04 on 31st December 2019, it soared to $383.88 as of 23rd December 2020. Isn't that the beauty of technology and innovation? The overall NASDAQ index closed the year up by plus 42.74% to 12,807.92 basis points as of 22nd December 2020, from 8,972.6 basis points recorded on 31st December 2019. They say technology is king. Second is America's S&P 500, the Standard & Poor's 500 index. It closed the year in the green with a growth of plus 14.13% from 3,230.78 points as of 31st December 2019 to 3,687.26 basis points on 22nd December 2020. The biggest movers for the S&P were stocks in the medical specialties, not surprising because of COVID, information technology services, again not surprising, semiconductors, data processing industries such as Nvidia Corporation, PayPal Holdings. The recent signing of a coronavirus aid bill and rollout of vaccines have increased expectations that the economy will quickly rebound from the pandemic, fueling gains in the markets. The third was South Korea's Kospi Composite Index. It polled 26.79%. The Kospi Index stood out in the 2020 compared to other exchanges across the Asia Pacific. South Korea's Kospi Index recorded the highest gain year-on-year, ahead of the Nikkei 225 in Japan and Shanghai Composite Index in China, and Taiwan's Weighted Stock Index and Bursa Malaysia's KLSE. The index gained plus 26.79% to close at 2,759.82 basis points on 22nd December 2020 from 2,176.67 basis points recorded on 31st December 2019. Asia being one of the major epicenters of the coronavirus pandemic, South Korea's GDP rebounded by plus 2.1% in third quarter 2020 after contracting by minus 3.2% in second quarter 2020, riding on its weakest growth amid the pandemic. Let's go to number four. The number four best performing stock market in 2020 was the Taiwan's weighted index, plus 18.55%. The Taiwan weighted index grew by plus 18.55% from 11,997.14 basis points. It closed at 31st December 2019 to 14,223.09 points. The global forecast for the Asian market had been cloudy, with coronavirus concerns offset by vaccine optimism. Well, this year, with the rise in technology stock prices, the Taiwan exchange has been a major beneficiary as investors sought safety in companies such as semiconductor producers throughout 2020. The exchange also benefited from a slew of liquidity resulting from quantitative easing. However, the central bank's stricter mortgage rules left buying interest in the home purchase market in the dumps. Let's go to number five. Was the number five best performing stock? Of course, China's SSC 180 Index Shanghai. The Shanghai Stock Exchange grew at plus 14.29% to 10,254.81 basis points from 8,972.92 basis points on 31st December 2019. Despite prevailing uncertainties marked by the COVID-19 outbreak as well as political, social, and economic concerns in China, the markets have seen a string of initial public offerings, IPOs, and an intense rally in share prices of consumer and technology companies. One of the reasons for the performance of the exchange is the overall resilience of China as it became the first major economy to return to post-coronavirus growth. This, of course, showed up confidence in the equities market of China. So the internet groups, technology such as Tencent Holdings have surged as consumers pivoted to online lifestyle during the pandemic. E-commerce, technology, food delivery, health tech, gaming, were all the big things happening then. The China IPO has seen increased listings in 2020 despite the economic challenges on the back of global investor demand for growth stocks, liquidity available from government stimulus policies, coupled with the US-China trade tensions, have caused more Chinese companies to seek primary or secondary listings on the Chinese exchanges. So, you now know why those top 5 emerged as the top performers. But let's go to the top 5 other low performing stocks. Yes, they were the lowest stock performers for 2020 across the globe. Austria, the Austria ATX, was the first in terms of the low performers at minus 15.04%. ATX topped the list of the laggards in 2020. The Austrian Traded Index is the capitalization-weighted index of the most heavily traded stocks on the Vienna Stock Exchange. As of 2019, the exchange comprised of 20 stocks. The index recorded the highest losses with a minus 15.04% decline from 3,196.94 points on 31st December 2019 to 2,707.52 points as of 22nd December 2020. The second low-performing stock market for the year 2020 was the United Kingdom's FTSE 100. You know the UK FTSE 100, very big performer in the global market, but it was second low-performing in terms of performance for 2020, minus 14.44%. Well, you all know that Great Britain was in the eye of this coronavirus storm as restrictions on traffic between the UK and other countries raised the pressure on supply chains. Brexit uncertainty, which has finally been signed now, coupled with fresh lockdowns to prevent the new strain of coronavirus sweeping across southern England from spreading to the continent, weighted on the capital markets. The FTSE 100, or you call it FTSE, suffered its worst year since 2008. It declined by minus 14.44% from 7,542.44 points on 31st December 2019 to 22nd December 2020. During the market crash in February, where global markets were at an all-time low, heavy falls were followed by a massive sell-up on the bourse in March as investors braced for a recession. The FTSE 100 lagged and has been playing catch-up now. Hopefully, it picks up. But the British market has a high concentration of cyclical stocks in the oil and gas, industrial, financial services, and construction sectors, which stalled the recovery. So, the reason why the FTSE was among the second lowest performing stock. The third is Singapore. Singapore's Times Index was minus 12.67% as the third low performing stock for the year 2020. It declined by minus 12.67% to 2,827.81 basis points on 22nd December 2020 from 3,238.07 basis points as of 31st December 2019. It is a capitalization-weighted stock index that is regarded as the benchmark index for the Singapore stock market. It tracks the performance of the top 30 companies listed on the Singapore Exchange. And we go to number 4. Number 4 is Belgium's 20, Bel 20, if we want to call it that way. Belgium, of course, is the center of Europe. Brussels is the capital of Europe. The Bel 20 was number 4 at minus 8.80%. The Bel 20 is a free-float market capitalization weighted index that reflects the performance of the 20 largest and most actively traded shares listed on Euronext Brussels and is the most widely used indicator of the Belgian stock market. Number 5, the fifth lowest performing stock for 2020 was France CAC, or we call it CAC 40. France CAC 40, minus 8.55%. The CAC 40 is a free-float market capitalization weighted index that reflects the performance of the 40 largest and most actively traded shares listed on Euronext Paris and is the most widely used indicator of the Paris stock market. The Paris bourse ended the year in red with a minus 8.55% decline in 2020 to 5,466.86 points as of 22nd December 2020 from 5,978.06 basis points on 31st December 2019. Very, very interesting ramp up of what happened in the key stock markets across the globe, the top performing and the low performing stocks. Thanks to our very own good colleague, Bukumi Adejobi of the Proshare Research, working together to create that value information. You want to get more of this information, log on to our website, www.proshareng.com. Go to the markets, click on it, you will see this very incisive information. You can download more of the report. Very incisive report we have prepared for you just to give you an insight to what the markets will look like. And let's get on to the outlook for Nigeria's capital market ecosystem. A lot has been said about the market. I mean, the NSE closed in very bullish manner, in an anticipated or unprecedented manner. And yes, we see a repeat of that performance in 2021. That was much what our analysts will be looking out for. But let's take a look at the equities market first. What will be the things that will shape the market? All eyes will be on Nigeria Stock Exchange as it takes that major step of demutualization. Yes, amidst the pandemic, amidst this wave, second wave concerns, we will be watching Nigeria Stock Exchange, demutualization. Long overdue, it's a big moment in the market history, and of course listing as the Nigeria Exchange Group. How will that change the whole narrative in the equities market? That is a big moment we'll be looking out for when that happens, because it's going to bring value, create competition, boost the market, deepen the market, improve liquidity. So a lot to look out for, and the balance of regulation as an exchange and as a group. Then, will there be key activities in the primary market? I mean, I saw those interesting trends in China. Okay, they had challenges in the global market, so they had to come in to list. So we're going to attract a lot of activities in the primary market. We'd like to see a lot of IPOs come up. So this will be one major thing to watch out in the equities market and Nigeria Stock Exchange. Can we bring those big players into the market from the power sector, oil and gas, telecommunications, particularly agriculture? That's my major interest, because the call is that we need to formalize that sector. So far, we have very few players in the agro space listed on the Nigeria Stock Exchange. Also, in 2021, the Growth Board, yes, the Growth Board really took some shape when some companies were migrated from the alternative securities market, SM, to the Growth Board. We're going to see more activities there because, of course, a lot of companies, private companies, tech companies need to explore the opportunities there. As you see, NASDAQ, number one globally in terms of performance. So what's going to really happen? Are we going to woo more potential companies into the market? That's something to watch in the equity space. And then the implementation of the budget 2021 will have its effect on the equities market. Definitely, key players in the sectors will begin to see the direction of this implementation. So that will be very important and how it shapes the market. Leveraging technology and digital platforms will continue to be something that the Nigeria Stock Exchange and all stakeholders would take seriously. Of course, you saw what happened last year. Leveraging technology, the digital platforms helped to sustain market operations and looking at what the NSE achieved and all the operators. So that has to continue. Yes, the second wave is showing a lot of concerns of COVID-19, but technology is here to leverage and improve operations. And I'm quoting a very renowned scholar, the first professor of capital markets in Nigeria, Professor Ottoabasi, a scholar in capital market studies now in National State University. He speaks extensively in the benefit of hindsight, saying the stock market will most likely pull back by the second half of 2021, having attained an unprecedented peak in 2020. He says the low-yield environment in 2020 acted like a tide that lifts all boats, and under such circumstances, there is a tendency that a number of stocks may have mispriced or priced above their intrinsic values. If history is any guide, market correction is bound to happen, especially in the last 2 quarters of 2021, regardless of any positive growth rate in the GDP attained in 2021 in Nigeria. So by and large, the outlook of the Nigeria stock market, according to Professor Waleke, in 2021 is essentially a bet on how long the Central Bank of Nigeria is able to sustain the current accommodative monetary policy stance. Yes, accommodative, that's the word. So, in his article, Gazing into the Stock Market Crystal Ball, what looks obvious is that in 2021, there's the potential for a downside surprise. Consequently, investors in the stock market, according to him, are well advised to follow the time-honored cautious investment path of asset allocation, risk management, and diversification. You want to read more of this crystal gaze into stock market performance of Nigeria in 2021, log on to our website again, www.proshare.com. We have the latest op-ed from Professor Waleke. I tell you, Proshare, we get rich insights on the market for you. Let's go to the fixed income and bonds market. What's going to really happen? What's it going to look like in 2021? For 2021, the Central Bank of Nigeria monetary policy approach, like earlier stated by the scholar, Professor Waleke, will continue to have huge impact on the fixed income markets. As you all know, the low interest environment due to its policy is what is challenging our market. Last year, we recall that the accommodative policy of the CBN led to low-yield interest regime in the market. So the sustenance of the pro-growth policy of the Central Bank of Nigeria, which includes the loan-to-deposit ratio policy, alongside other policies, and of course, the reduction of the MPR interest rates, means this will be experience of the market in the year. We may still be facing, for the first 7 or 8 months, a low-interest regime. Expectedly, we look at participation in the bonds market. Edo State signed its 2021 budget, and Edo State is very ready to engage the market. So that's one state that is going to be carrying out one activity in the bonds market subnational. We expect private sector players also to assess the bonds market, come on board and raising capital through bonds and commercial papers. Last year was massive. Many companies came on board to leverage those channels. So we hope to see more of that in this year. In the second year of the decade of 2020 to 2030, we expect sustainable financing through the market to take shape, particularly to the climate bonds. And this is where FMDQ, the exchange that plays big here in this market, takes a lot of credit for its initiatives in driving activities around it. So we expect to see some level of sustainable financing activities in this second year as the target 2030 to achieve the Sustainable Development Goals. The policy of the Central Bank of Nigeria as it concerns the foreign exchange market will also be something to monitor, from the interventions in the investors and exporters window, FX window, and the quest to achieve a free float regime. Will that fully materialize? Also, the Central Bank of Nigeria identifies with the concerns of international financial institutions on the need to have a convergence in terms of Forex. Let's go to the unlisted OTC securities market. Well, some very interesting things that NSD plans to do, so let's re-echo them. First, they want to go into open commercial papers. Second, they want to bring an additional sub-brokers. Third, they're looking at providing guidelines for dealers. Fourth, we're looking at equity crowdfunding. Very interesting part is the NSD private markets. We'll see how that will encourage private companies. And of course, increase the opportunities for digital exchange, what we call digital currencies. I mean, a lot of young people, millennials, are looking forward to that, particularly issues of crowdfunding. So let's see how that plays out. It's going to be very key in terms of that market. And of course, listing of companies, very important. They also want to list some big companies and woo them in 2021. And we're not leaving out the commodities exchange. Commodities market really did a lot amidst the pandemic. One thing is very clear: the commodities exchange will play a key role in protecting the farmers, producers in all aspects, those at the production base. From the activities of middlemen, they are advocating that we have a system that protects their interests. We expect to see more synergy across the commodities exchange markets to deepen its activities and make impact in terms of contribution to the economy, so diversifying our economy, particularly to agriculture and solid minerals. Also, we expect to see the increased adoption of technology, leveraging the digital platforms, and a lot had been achieved by FX last year to its COMEX platform, so we hope to see more of that in terms of commodities trading. And of course, the Nigeria Commodities Exchange, we hope to see them do much in that regard too from Abuja. But the big story will be the Lagos Commodities and Futures Exchange. It's going to take off this year from first quarter, so we want to see a lot of things that happen there. It's going to change the whole narrative of bringing agro and solid minerals and achieving something that's of huge interest to Nigerians, achieving trading in even crude oil. I mean, Nigerians can participate. That's its big goal, and let's see how that can happen. Of course, increased market orientation and sensitization of the values of the commodities market will be another very important aspect to watch in the commodities market. So 2021 is wrapped up with so much to expect, and definitely we'll be here on WebTV to give you all the updates from these various critical segments of the market. And if you're hearing this now, definitely you should have yourself ready to get to the ride of 2021. Yes, we know of the risk, the COVID-19 pandemic, the concerns, but the market is really raring to go. So we'll be here to give you all the insights, reports, analysis, and information you need to make the right decision. So As we ramp up, I'd like to advise once again our investors, retail investors, and all community investment community that this year, just like last year, you have to take caution. Do not invest in any platform or any initiative that is not registered or regulated by the Securities and Exchange Commission. You have to be wise with your investments so that you can make the right decision. How do you make the right decision? Except you get the knowledge, the information, and the empowerment. And that's what Proshare is here for. Proshare provides this information, and we capture those moments in WebTV, the developments around the markets, bringing you those key information. Thank you once again, and that will be all for the very maiden edition of the Market Review, calibrated for you in 2021 to serve you better. Visit our website, www.proshareng.com, to watch our videos, read our news, analysis, and reports across board as it concerns the market. We have the analyst too that gives you big-time, real-time stories of what's happening in the capital market. Please join us on social media. Send your views and comments on what you think will really shape the capital market this year. Send them to news@proshareng.com by mail, or tag us at WebTVNG or at The Analyst. We really want to make this year very, very engaging in terms of conversations. And next week's edition, we're having some very interesting conversation. We'd like you to be part of it on social media. Till we come your way again, thank you for watching. Have a nice day, and let's make 2021 great, interesting, and exciting through our very, very great opportunity in the capital market. Thank you. Have a nice day, and please remember, stay safe in 2021.